What if you could borrow money from yourself just to prove you're responsible? Sounds strange, right? But that's exactly what a credit builder account lets you do, and for millions of people with no credit score or damaged credit, it's one of the smartest financial tools out there. Unlike a traditional loan where you receive the money up front, a credit builder account flips the script. You make monthly payments into a locked account, and once the loan term ends, the money becomes yours, plus you've built a credit history along the way. It's not about spending power, it's about earning trust with lenders by showing you're reliable. And the best part? You don't need a credit score to start. Let's change that today and build a better future for your finances. What is a credit builder account? A credit builder account is a special type of loan designed specifically to help people build or rebuild their credit. But here's the twist. It's a loan where you don't actually get the money right away. Instead, the loan amount is held in a secure account and you make fixed monthly payments toward it over time. Each payment you make gets reported to the major credit bureaus, Experian, TransUnion, and Equifax. These on-time payments help create or strengthen your credit history. Then, once you've made all your payments, the money is unlocked and returned to you. Think of it like saving money while building your financial credibility at the same time. Unlike traditional credit cards or personal loans, a credit builder account doesn't tempt you with spending. It's not meant for shopping or emergencies. It's a structured path to credit improvement, especially useful if you're starting with no credit at all or recovering from a rough financial patch. Why they matter, especially with no credit. If you've ever tried to get a credit card or car loan with no credit history, you've probably hit the infamous credit paradox. You need credit to build credit, but you need credit history to get approved. It's a frustrating cycle. That's where credit builder accounts come in. They're specifically created to help people who are just starting out or trying to repair their financial reputation. By giving you a safe, structured way to make monthly payments, they allow you to demonstrate financial responsibility without needing a credit history to qualify in the first place. This is a game changer for many groups. Students who've never had a card, immigrants new to the country, young adults building independence, or even people recovering from bankruptcy. Instead of relying on co-signers or high-interest credit cards, these individuals can use credit builder accounts as a low-risk stepping stone to better opportunities. With time, those consistent payments open doors to better credit cards, car loans, and even mortgages, because now you have a proven track record. That's why they matter. How credit builder accounts actually work. So how exactly does a credit builder account work? It's surprisingly simple. First, you apply for the account with a provider like Self, Credit Strong, or even some neobanks like Chime that offer similar credit building tools. There's no hard credit check, so approval is easy even if your credit score is 0. Once approved, a small loan, typically ranging from $300 to $1,000, is set aside in a locked savings account. You don't get this money up front. Instead, you make fixed monthly payments over a set term, often 12 to 24 months. These payments are reported to the 3 major credit bureaus, helping build your credit profile. Once the loan is fully paid, the money in the account is unlocked and returned to you, minus any interest or administrative fees. Depending on the provider, interest rates can vary, but they're usually low and clearly stated up front. Some platforms also charge a small startup or service fee. What makes this system unique is that you're essentially paying yourself. There's no spending temptation, no risk of maxing out credit, and no complex application process. It's just you, a structured plan, and a guaranteed credit building experience. It's like financial training wheels, with the added bonus of ending up with savings. How they help improve your credit score? Your credit score is made up of 5 key components: payment history, 35%, credit utilization, 30%, length of credit history, 15%, credit mix, 10%, and new credit inquiries, 10%. Credit builder accounts directly impact the most important one, payment history. Every time you make an on-time payment toward your credit builder loan, it gets reported to the credit bureaus, which builds a positive track record. Over time, consistent on-time payments help raise your score, showing lenders that you're dependable. While these accounts don't impact credit utilization directly, since there's no revolving credit like with a credit card, they do influence credit mix and account age, 2 factors that further strengthen your score. And because there's no hard inquiry involved, you're not dinged with points for applying. Once you complete the account and the money is released, you'll often see a noticeable improvement in your credit profile, especially if you started with no score at all. In fact, some users report going from 0 to the mid-600s within a year. That opens the door to better credit cards, auto loans, and even home financing. So while it may feel slow at first, credit builder accounts are building you a solid financial foundation, one on-time payment at a time. Are credit builder accounts worth it? Pros and cons. So are credit builder accounts actually worth your time and money? For many people, the answer is a solid yes, but they're not perfect. Let's break it down. Pros first. They allow you to build or rebuild credit safely without the risk of overspending like with credit cards. You're not borrowing to buy, you're borrowing to build. That means every on-time payment builds your credit history without the temptation of going into debt. Along the way, you're also learning financial discipline, which is an underrated superpower. By the time your account matures, you've not only built credit, you've saved money too. And once you've completed your payments, many providers give you access to other financial tools like secured credit cards or even loans with better terms. Now the cons: you don't get the funds up front, which makes this a long game. There are also small fees or interest charges that can add up if you're not careful. Most importantly, the entire benefit hinges on making every payment on time. One missed payment could hurt your credit more than help it. Compared to secured credit cards, credit builder accounts offer fewer spending options but are often easier to qualify for. They also don't require a deposit up front like many secured cards do. So if your goal is purely to build credit with structure and safety, they're absolutely worth considering. Who should use a credit builder account? Credit builder accounts aren't one size fits all, but for the right person, they can be a financial game changer. They're ideal for people with no credit at all, such as young adults just starting out or individuals who have never used credit products. They're also a solid option for anyone recovering from bankruptcy, defaults, or a low credit score who wants to rebuild in a low-risk, structured way. Students, recent grads, and immigrants who haven't had a chance to establish credit yet will find these accounts especially helpful. And if you want to steer clear of high-interest products or avoid the temptation of overspending, these accounts offer a safer route to credit growth, but they're not for everyone. If you need cash immediately, a credit builder account won't help. It holds your funds until the end of the term. And if you already have a strong credit history with a healthy score, you might benefit more from other financial tools that offer immediate perks like rewards or lower rates. Bottom line, these accounts are best for those focused on long-term growth, not short-term spending. If this helped you understand credit a bit better, like this video, share it with someone starting their financial journey and subscribe for more no-fluff financial tips that actually work in real life.